Eric Muathe, Muathe.com, for the weekend of January 16th and January 17th, 2016. Let's take a look at the markets here with about 1 hour and a half to go. And we are looking at the Dow down about close to 3%, down about 475. The Nasdaq is down about 3.5. S&P 500 is down 2.7. We are looking at crude oil being down about 5.7, and the VIX is up about 22%. So why don't we go take a look at the charts? We begin by taking a look at the Nasdaq weekly. And if we go back to the previous highs, there was a line that we were watching back about 3-4 months ago. The market had come here, tested that in November and failed. And also, of course, we were expecting some type of a pullback. I guess what's happened here has been a faster drop than anybody would have expected, but it did come from a predictable resistance on the weekly chart. Right now, we are looking at markets pressing through 2015's weekly closing low, and there, at some point during this week, it seemed like the Nasdaq might hold above that level. The level there that the market is now trading below is 4683.92, which suggests that we should not be surprised now that this might actually eventually over time lead to much lower prices. So on the weekly, we had actually, at the end of last week, we were looking at a 5-year weekly chart for the Nasdaq, where it was giving some type of potential support coming back to the lows of 2015. Since then, the market has been finding support around that range right there, which so happens to be at about 38.2 on its weekly time frame. So this is 5 years of weekly data, and you can see that this is where the market has been bouncing on this line. Every time it hits that line with uniform activity, we did get a bounce over the last 2-3 years. We came close here in 14, that held. We held here for the lows there, and even here for the lows there before this slight bounce. So the market's been using that line for support. Problem is right now we are trading below that line, so that thesis doesn't seem to be playing out. So as long as the market is trading below that line, we should continue to expect lower prices. So that seems like there's no support for now. Also, we can see that there was another line that we had drawn on this 5-year weekly. That line is not holding. It is the lows, the line connecting the lows of 2011 and the lows of 2015 right here. Right now we seem to be breaking through that. That suggests that we've broken a long-term trend line, which is suggestive of a market that wants to go down. So the risk continues to be to the downside. Now, if you take a look at this 5-year weekly chart, what's interesting is if you take the weekly closing low there in 2011, weekly closing low there in 2011 again, and the weekly closing low here in 2012, you can draw a straight line that ends up somewhere here at about 4200, which seems like maybe, who knows, somewhere around there might be some short-term support attempt if we get to that point. So that's something to keep watching. Should the market come and bounce on this line here at about 4200, maybe there's a chance for support, maybe not, but we shall see when we get there. For the day, you can see here that we are pressing below 30.90 for the day. So with about an hour and a half to go, I think that this market is not going to bounce for this last trading day of the week, just because it is trading below 30.90. In fact, I would speculate that more than likely the close is going to be closer to the lows of the day, if not at fresh lows for the day, just because of that move below 30.90. If we take a look at the Dow weekly, you can also see that there was a trend line we were watching late 2015. The market could not move above this trend line on multiple occasions. I mean, it tried and tried and tried and tried and tried again, and finally it gave up. So those were resistance levels there. Also, the RSI was showing topside resistance right there. And for now, we are seeing that it is pressing to fresh weekly lows below 2015's weekly closing low. And for the Dow, the level that the market is breaking through is 16,101, 102.38. So as long as it is trading below that price range, this market is broken, and we should still be bearish and expect lower prices. If we take a look at the Dow daily, maybe what's going to happen is we might have to test these lows here, or maybe test the daily closing low there. So that seems like a logical place to set some targets, either the daily closing low somewhere around there, or the intraday low of August 24th 2015. For the day today, before the close here, seems like the Dow is not going to have a chance of bouncing. Why? Because it's moving its RSI below 30.9. On days when it does that, it tends to have a big close into the end of that trading session. Now, even though most of this video so far has been on the bearish side, let's take a look at the 30-minute chart for the Dow. And here we can see some slight improvement on the technicals, because we've been making lower lows on a 30-minute chart. As you can see, lower lows, lower lows, lower lows. So there's a line there. And yet, as we are making these fresh lows, we can see that the market is improving. Now, if you recall, on Thursday, at the highs of the day, the Dow was up about 330 points, and it turned down. And that did come from this line here, because this same line was the break level there, and the market came off the highs there in late December. And since then, this blue line has become a problem for the market short term. It was a problem here at the backtest failure for the highs there. It was a double top problem there for these highs. And as of Thursday's high, when the Dow was up about 330 points, you can see that it hit that line, that high there, that level. So we are stuck in that range, in my opinion. So there's a wedge that looks like this. Resistance on the top side, support on the bottom side. And so we are dancing pretty much on this range. And if we come back and break that channel, for example, if by the end of the session or at some point if we break that positive divergence line, maybe the market might plunge even for a deeper move lower. But for now, it seems like it is giving the bulls something to hold on. I think this is good enough support for maybe hour to hour, some type of a rally attempt, as long as this positive divergence line is holding on the 30-minute chart for the Dow. This week, we saw the Dow Transports move below 30.9. Once the Dow Transports moved their weekly RSI below 30.9, we knew it was going to be a big down week, and also potentially into the close of the week. Now, of course, the biggest risk in the market has been this monthly chart for the Dow Transports. So three-year monthly chart for the Dow Jones Transports. And we can see here, once they broke through to fresh 3-year lows on the monthly RSI, we were expecting a big drop, and that drop is taking place. We can also see that the risk here, which is being right now realized, is the fact that the Dow Transports on a monthly chart went below 38.2, which might explain this big drop. Because as you move below 38.2, you tend to have a big swoosh lower. And we can take a look at the MACDs, also confirming bearish environment as we move to fresh 3-year lows there, and the main MACD also moved to fresh 3-year lows. So the Dow Transports have been giving a major sell signal, which might explain why the market right now is struggling. Take a look at the S&P 500 on a weekly chart. Just want to mention here, we talked about this uniform activity rejection at the 50 line of the S&P 500. So once we saw that rejection with uniform activity at the 50 level on the weekly, we knew that that might lead to a pullback. Of course, I don't think anybody knew there's going to be a straight drop since then, but that's what has taken place. We're taking a look at the S&P 500 breaking through 2015's weekly closing low at 1921.22. So the S&P 500 dropping below that price range just suggests that week to week this could get worse. And in fact, there's another view. Let's go back to my weekly chart here on the SPX. It's a little bit heavy in terms of lots of things on the chart. Sometimes that can be a little bit frustrating for anybody looking at them, but just want to draw a simple line here, so bear with me. I believe this is 3 years worth of weekly data, something in that range. And what I get at here is, once we moved above this level here, which was 1881.14, which is this weekly closing high sometime in 2014. Once we broke out here, we had a nice move. The market's been using that on a weekly closing basis for support. It did not close below that price range there. It bounced again. We came all the way back here in August. We did not close below that. We tagged it and bounced, came back and tagged it again and bounced. And so here we are again trying to target and bounce. So the level to watch there again is 1881.14. If the S&P 500 can hold above that on a weekly closing basis, that's good enough to at least give some traders, the idea that the market is holding steady, because this has been a good support range. So let me draw that again. So this range here, the market has not closed below that ever since it broke out here in, let's call it about May, June of 2014. Market's been holding above that on a weekly closing basis. So yes, intraday it would move below it here, but held above it. Here we went below it intraday, but we did not close below that. Even here we held here, did not close below it, and now we are doing our best with about 1 hour to go before the close. So 1881.14. Let's see whether the market has enough energy to hold above that. If not, if it can't hold, then that's another nail in the coffin, suggesting that week to week we should not be too surprised if the market is down. In fact, I can say this: if the market is trading below 1881.14, one can still remain bearish. But if it can move above that price range, then maybe the market is not as bad as it might seem. Take a look at the daily chart for the S&P 500. So the close of Friday's session is going to depend pretty much on whether we hold above 30.9. If we stay below 30.9, expect the market to be lower into the close. Otherwise, if we can hold above 30.9, then the drop might not be as bad into the close. So it just depends on how the market responds to that price range. Now, want to take a look at the hourly for the SPX, because just like the 30-minute chart for the Dow, here on the hourly for the SPX, making lower lows, but with improving technicals. And I think, as I've mentioned before, this might actually set up for some short-term move to the upside, as long as this positive divergence line is holding. Take a look at the S&P 500 hourly on the 30-minute chart, So 30-minute chart for the SPX. And here I'm using 30 minutes, and I'm using RSI period of 26. RSI period setting, so 26. So just in case it looks a little bit different from yours, but what we see here is lower prices, while we are seeing an improvement on the technicals. And so it connects the last couple of lows throughout 2016 and continues to improve. So that might set up for some type of a move higher, as long as that positive divergence line is holding. If it's holding, that's good, and if it breaks through that, then we can see a continued sharp move to the downside. Right now it's holding, so the market could be setting up for a slight recovery. Now we can take a look at the 5-minute chart if we want to, just because the VIX is high, and the VIX is trading at about 28, which is pretty high for the VIX. And I'm just going to draw a simple line there with a high VIX. We can look at 5-minute charts, and if we draw a line there at about 61.8, now this is something we've been watching throughout the week for really good guidance. About 61.8. Again, RSI period here so happens to be at about 21, but this is interchangeable with 26. But let's not spend too much time on the RSI setting. Key here is resistance there, the highs also there, resistance here, you got highs there, resistance here with uniform activity, you got some highs there, resistance here with uniform activity, highs there, and also as of late Thursday we hit that level and we pulled back. So this 5-minute chart has been giving us short-term highs for those of you who trade short-term, and we can also see that right now we can draw a line that might tell us how the market will close on Friday. So here we can see that this was the support line on the 5-minute window, and so what I'm doing here is I'm just extending the same line, and you can see that when we move below it we get a drop. When we moved below it, we got this drop, right? It makes sense. And also on a short-term basis, when we move above it, above the line, we get this slight recovery. And right now we are trading on the line, which shows that if we can hold above the blue line, we might have a recovery into the close of Friday session. Otherwise, if we don't, and if this line confirms resistance, then we might have a drop from the current levels right now. S&P 500 down 46 points. So depending on how markets respond to that, so let me draw that quickly here, is anybody trading this intraday short-term, for all you short-term traders, it's a good line here right now. Anything below that into the close of the Friday session, we get a pullback of this level, or the market takes out that line and moves higher, and the market has a better close than the current drop. So depending on which way we go, the market is going to decide whether we get a pullback into the close or anything of that kind. Now keep in mind that on the daily, things are setting up more than likely here depending on how S&P 500 holds. Right now we are back above 30.9, suggesting that the drop is not going to be as bad as it was looking like earlier in the session. Or maybe we go back below 30.90, we'll see. That's the S&P 500. Take a look at the Dow, and pretty much similar type analysis. As long as on a month-to-month basis, we are seeing the Dow move to fresh monthly lows beyond 2015's monthly closing low. This is on a month-to-month basis a risky market still. We can see here we are pressing to fresh monthly RSI lows and also moving below 50, suggesting a big down month into the close of the month for the most part. And also we can also see here that as long as the MACDs are moving to fresh 3-year lows, we should still be expecting lower markets. So the Dow still looks bearish irrespective of how things are trading hour to hour. And then the Nasdaq, on a month-to-month basis, we broke through 2015's monthly closing low. That's a major sell signal. We can see the Nasdaq moving to fresh 2-year lows on the RSI, which is why we've been expecting a lower move. Also moving below 50 suggests that this move this month makes sense, because as you move below 50, you get a big drop. Right now down about 10%, which is consistent with a move below 50. And here we can see that the MACDs are moving to fresh 3-year lows, which is a major sell signal. So all the makings of a bearish market are still in play. So irrespective of how markets close into Friday, and as we go into a 3-day weekend, we should still be looking at this market to be very questionable. Eric Muaded, muaded.com. As always, I'll keep you guys posted. Good luck, peace, and blessings. E-A-C-S. I am out.